Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate and Business Show, brought to you by Capital Mortgage Funding, powered by CMG Home Loans, NMLS number 1820. We are an equal housing lender, and special day today. This is the start of the 24th year, Lisa Lawson, that we've been blessed to have this radio show to tell everybody what's going on in the markets.
That's actually pretty amazing if you think about it. We've been answering questions for 24 years, so I think that's actually pretty awesome.
Yeah, along with Harvey Freed, Harvey is doing MHSAA high school football officiating training this morning. Becky Alley is on a work assignment today. John Kolb is doing something up north at his cabin, and with me, my co-host, rock star, Google the Office, Lisa Lawson. Good morning, Lisa.
Morning. And I hate the nickname Google.
You love Lisa loves that because that, it really intimates that she knows everything. Now, we all know that she knows everything, but then when we broadcast it live in the morning on a beautiful Saturday morning, and these are the kinds of Saturday mornings in southeastern Michigan we live for.
This is like perfect weather. I mean, what is the high today? 75 and sunshine? I mean, no humidity. It doesn't get any better than this.
It is beautiful. And those lovely voices you hear are our special guests, our realtor partners today, Joy Rochlitz and Verona Sibou from Realty Executives Hayes Road in Shelby Township. Good morning, ladies.
Good morning.
I feel like I'm on The View.
All the ladies.
So, I'm just going to moderate it. You guys are going to do all the talking. We're going to talk about a lot of things. Mortgages, business, real estate, everything going on in the market. And let's just talk about the market. And the market I'm referring to is the stock market from this past week. So from last close of business on Thursday to close of business yesterday, we saw one of the most volatile weeks that we've seen in years, Lisa. And everybody out there that's awake and wants information are saying, well, what does that have to do with mortgages and real estate? Well, the stock market and the sentiment that people bring and the attitude that they bring is reflected in investing and consumer confidence and what's going to go on for the future. And last Monday was a roller coaster in the stock market. And fast forward, and we're going to recap that, but fast forward to yesterday at the close, the market's still down about 900 points from where it closed last Thursday. So what did that mean? What does that mean for mortgage interest rates, real estate, all the things? And that's why we have Verona and Joy in today, because really things haven't changed in terms of what's going on in the real estate market, ladies. I mean, there's no more inventory on because the stock market went crazy and mortgage rates did go down a little bit, but then they went back up again. And the reality of the situation is, you're still closer to 7 than you are to 6.
Yeah.
So, Lisa, it changes dramatically every single day and intraday.
Yeah, I mean, I think a lot of people got super excited because they said, oh my gosh, the rates are dropping. Well, that happened for a couple days and then they rebound. But it's the same, I hate to say wolves, right? That say the rates are dropping, time to refi, time to buy over and over and over again. Doesn't do with the same passion that the rates rebound a little bit, And if you were waiting for rates to drop, you still need to get ready because there's going to be a point and you aren't going to be ready. If you don't have a loan in the system, you can't call someone and say, I found a house. Let's get this rate locked today. Your offer's not even accepted. Like all these things have to be done in advance.
Yeah.
You have to be prepared. And I think people kind of forget that. You know what I mean? They think, I'm going to wait. Well, if you're talking about a market where you had an opportunity for 3 or 4 days to get a lower rate before it rebounded, if you're not prepared, you're not going to be able to take advantage of that.
And that rate needs to be locked in.
It has to be locked in.
We have to lock that rate. We have to go into the market and lock it in. Now, we want you to join us here at 248-539-9797 on the radio. So call us.
I am going to say we do have programs where you can pre-lock a rate without a property. But the problem is you have about 90 days to find and close on a property. Well, that really gives you 45 to 60 days possibly to find a house and get an offer accepted, because that last 30 days at least, you're going to need to get to close on that loan and have your inspections and get your appraisal and, all the things. Yeah. So, yes, we do have programs where you can lock in advance of having an address. But if you can't find something, it doesn't do you any good. And you still have to have all your documentation in, right? You still have to go through a pre-approval process. All that has to happen before you can even use one of those programs. So, being prepared and getting the correct information is more important. And I feel bad because there's a lot of people who probably could have taken advantage of that little rate dip, but they weren't ready.
And we did, yeah. And the people that were ready did
yeah.
take advantage of
Absolutely.
it. And we've got that going in the system. And Harry Glanz, Lisa Lawson, Capital Mortgage Funding, Joy Rochlitz, Verona, Sibou from Realty Executives. Ladies, so let's talk about the market in your world. Let's talk about the real estate market. Any more homes coming on the market, Joy?
No, I see it kind of staying the same way, same that it's been for quite some time now. Still a seller's market, still a lack of inventory, but that doesn't mean you can't get a house. You just, like Lisa said, you have to have your ducks in a row.
Yeah, so we talked about it outside before we came in, and Verona, you have to be ready. I mean, we talk about price ranges. We talk about 200,000 and under. We talk about 400,000 and under. Whatever the price range is out there, sometimes they're not in moving condition, right? I mean, you've got to be prepared for what you see because likely the homes that are in moving condition, ladies, they're already being snapped up, right?
Yes. Usually within the first day even, you'll see it go pending. So similar to what Lisa said, you want to have your pre-approval done ahead of time, not waiting. We hear it so many times where people say, I'm waiting for the right house to drop and then I'll get my pre-approval. Nope. You're going to miss it. That's not how you want to go
and
about it.
People are still doing that. That's amazing.
So it doesn't matter. Even with all this information, realtors telling them that's not how to do it. Loan officers and mortgage brokers saying that's not how you do it. You're going to miss. They still do it that way. I get it because it's work, right? Nobody wants to dig up tax returns and W-2s and pay. But it's not that hard. Mm-hmm. You know what I mean? And once you do it, everyone's like, well, then I got to keep updating it. Not really. Your W-2s don't expire. Your tax returns don't expire. They're good for, years.
Yeah.
Yeah. You might have to send me an updated pay stub and an updated bank statement. If you can't do that, then maybe this isn't the thing for you to be doing. You know what I mean? I don't mean to be rude, but once you get pre-approved, the majority of the documentation doesn't change.
As automated as our process
oh my
is,
gosh. It's
it's automated. You still need documentation. You still need tax returns. You still need pay statements. You still need bank statements.
Right.
You still need copies of driver's license. There's still things that a borrower, Lisa, has to furnish to us.
Yeah.
And when you ladies sit down to list a house, there's information that you need to get, right? Everything isn't automated. Systems are automated, but we still need people to do some work. Okay, 248-539-9797, Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding, powered by CMG Home Loans.
Yep.
Equal housing under 1820. Why do we have to keep saying that? Because it's the rules, it's the law. We have to disclose that we are licensed and that we are able to do this. We've done hundreds of thousands of loans all across the country for the last now 34 years. We've saved, hundreds of thousands of families, millions of dollars. Yeah. And that's the best part about doing this. And I did mention this is the 24th anniversary, going into our 24th year actually on the radio, talking about these things. Now, I want to get into, what do you think is going to happen this fall, Joy? Do you think that there's going to be more homes on the market? Now, usually after school, usually by the middle of September, end of September, the kids are back to school. Everybody says, well, there might be more opportunity to buy a house because the kids are back at school. What do you think about that?
I think that depends on the house that you want to buy,
Yep.
the price range you're in. We were just talking about that, the 450 to 750 price range, those are still going to remain competitive. Because people that are moving into those houses, it's probably not going to be their first house.
Correct.
They're probably downsizing maybe, or, people looking for a ranch instead of a colonial because their kids are gone. They don't want to walk down the stairs anymore. Mm-hmm. That market, I think, is going to stay really competitive this fall. I don't know. What do you see?
That's a huge thing, Verona. That's a huge thing. People my age, okay, I know you're looking at me, the old guy. All right. People at my age, they don't want to walk upstairs anymore. And they want a first floor. They want a first floor primary. They're back in vogue. Ranches are back.
Yeah.
And they're typically selling for more than two-story homes, correct?
Mm-hmm. Yes. Split levels as well.
The
ones that have the first
thing.
floor master, those have been a plus. Even with the younger generation, you'd be surprised how many people have back issues and, depending on their job.
Or they just don't want their kids on the same floor.
Yes, that too.
I hate to say that, but that's, whatever
quieter.
floats your boat.
Well,
yeah,
Lisa, you bring that up. I've been in my house now, it's 31 years. And when I bought our house, and I have a split level, I have a first floor primary, and my kids were very, very young. And we put them upstairs, and my wife says, don't you want to be near the kids? I said, hey, we have baby monitors. do they still have baby monitors now?
They're even fancy now, cameras and everything.
Yeah, you can watch them from anywhere.
And then finally, I got credit for knowing something 31 years ago, as it turns out, that we have a first floor primary.
Yeah, and now you don't feel the necessary need to move, right?
Well, that's the issue now. Right. That's the issue for you ladies in the market. People that are in ranches and that have 2.25% interest rates, or they're on a split level with the first four primary, they don't feel the need to move. I'm not moving. This is it.
Yeah.
Well, and a lot of the issue in that is that so many builders built colonials.
Yes.
Because of the families wanting to move up there. So there are newer homes anyway. I feel like there's a lot more
McMansions.
colonials and ranches.
Yeah.
And ranches also have more square footage on the ground, so that's going to be more expensive because of the cement and everything else. So ranches, as a rule, go for more per square foot. So that's good for you if you want to sell.
Yeah.
It's great.
Yeah.
Not looking to sell, but 248-539-9797. Call
Buy
us.
your
Let,
next
let us know if you're looking to sell or looking to buy. We got to go to our first break. Fastest hour in the radio business.
Yes.
And we'll see you at the turn. Good morning, and we're back from our first break. This is Harry Glanz, along with Lisa Loss from Capital Mortgage Funding. We have Joy Rochlitz and Verona Sibou from Realty Executives, Haves Road in Shelby Township, heart of Macomb County.
Yeah.
Love Macomb County, do a lot of business out there, have a lot of great partners out there.
This is like one of my favorite offices. It is literally across the street from my house. I could walk there.
Yeah, full disclosure, Lisa lives there, so it's okay.
I live in Macomb County.
Yeah, we love that.
We do stuff in my office all the time.
I do.
Talking at the break, what's going on, the volatility of the stock market really set the tone, but then it came back a little bit, not all the way back, still down about 800-900 points. Mortgage rates dropped for about 30 seconds. Whoever was on top of it locked in their clients. And if you're hearing that rates, the news is always a little bit late, because that's why it's called the news. It's just late. It's historic, right? Once it's out there, and it's over with. If you heard rates dropped a little bit, yeah, that was true. But now, listen, they're still closer to 7% than 6% out there. And what does that mean in real numbers? And this is where people forget. They hear numbers like 7%, if it drops to 6%. Well, in dollars, every $100,000 of a loan that you take out, the difference between 7% and dropping to 6% is $65. Now you say, Harry, well, $65 isn't a lot of money, but if you have a $200,000 loan, it goes to $130, and so on and so forth. And I could save you just in your daily life. And I'm going to hold up the Starbucks cup. Hi, everybody. There it is. If you're, I hate to say it, if you're going and spending $5 a day for 30 days, there's $150. That's, you ready? $200,000 in a mortgage that you could spend, even if the rates and afford, they're at 7%. So I'm a big believer in advising people, Lisa, on what they can afford, the mortgage programs. We've never been a mortgage du jour advisory system. We don't do that. The best rate is a fixed rate if you're going to stay in the house for a long time. Now, whether it's a 30-year, a 25-year, a 20, a 15, a 10, it just depends on somebody's situation and what they can afford. And we're going to talk about affordability and housing in a second. But the program du jour, an adjustable rate mortgage, if you're going to be in a house for a long period of time, you're going to get caught. That's a rabbit hole you don't want to go down. And years ago, it was in vogue to go ahead and other places said, go get an adjustable rate mortgage or a pay option arm. And I don't even want to get into that today. But ladies, let's talk about affordability. Affordability is a little rough in real estate route because right now, right this second, and why people should buy homes right now is because we know they're going to appreciate next year and the prices are not going down. They're going up. Correct, Verona?
Yes, absolutely.
And what do you say? I mean, we're looking at double-digit, Joy, appreciation. The last few years, it's been 10, 12, 13% in our area. In other areas, it's been a lot more. But Southeastern Michigan, the appreciation rate, so if somebody bought a house for $200,000 last year, you could bet it's worth at least $220,000 this year.
Yeah, and that's not changing anytime soon either. Prices are still going to be going up, at least for a while, as far as we can tell. There's no sign of that changing.
No, there is no sign of that changing because here's the situation. It's supply and demand.
Yes.
Right? Not a lot of houses on the market.
No.
Demand. You have how many buyers right now in your top left-hand drawer that you could call, right? The phone numbers if there were houses available. A lot. Every realtor out there could sell many houses if their houses would come on the market. It's just not happening. So the supply is down, which creates a demand, which makes it a higher price. So we don't see that changing anytime soon. And the average home buyer right now is, it's 34. Person's age is 34 years old, between 27 and 41, which turns out to be an average of 34. And those millennials are buying homes, Lisa.
Yeah, I mean, and absolutely they should be. I mean, they always say that you want to make an investment in yourself. And I tell people, investing in your own home as a primary residence, there's so many other benefits. Yes, there's tax benefits, but there's community benefits. There's pride in home ownership. You know what I mean? There's things that you get when you establish yourself in a community that you don't get. It's just not the same when you're a renter, because renters always feel like they're temporary, right? You might move somewhere else. You might rent a different place, a few years from now. You lay down roots, and I think you make an investment in not only yourself, but your community. And, I think that's more to be said for that than even appreciation sometimes. Nothing makes me happier than coming home and looking at my backyard and chilling on my patio for a minute and just kind of relaxing and listening to all this big forest behind my house. I listen to the wind and the leaves, and I love that sound. And that gives me peace and it gives me comfort. And, great, my house is appreciating. But I wouldn't get that if I was renting an apartment.
Well, and
I don't get my own space.
And you
I don't
bring
get
up
any
rent.
of that.
You bring up rent. If housing prices are going up, that means rents
Rent
are
is
going up
crazy.
too,
Going
right?
up.
Yeah.
So rents are going up, and we have so many programs, and they're still out there. We're doing this a long time, and everybody thinks you still need 20% down to go ahead and buy a house. Well, Lisa's going to tell you, there are home buying programs where you don't need 20% down.
No.
You might not even need 10 or 5% down, Lisa.
No. So I closed a gentleman maybe 6 weeks ago, and it was a $220,000 purchase in Clinton Township, and he brought $2,300 and some change to closing using the MISHDA program. So, I mean, where else can you get a $220,000 house and bring 23? It was like 2368 or something like that to close. So yes, there are programs out there. Yes, you have to qualify. So if you're somebody who's making $400,000 a year, don't call me and ask me about MISHDA because it is income based. But, and people have this misnomer about MISHDA that you have to buy in specific communities. MISHDA's territory is the state of Michigan. If you're buying a home in the state of Michigan and you qualify, there is no separate city you have to buy in. That's a huge misnomer. So, besides Mishta, there's National Faith Home Buyers in Wayne County. We have a Chenoa down payment assistance program. We have a FHA, we call it FHA Choice here, and that's specific to CMG for buying a home. There's so many programs out there, but you don't know what you don't know unless you call. And I think people think, well, FHA is 3.5%. There's conventional loans with 3% down, but you add that with the assistance, you can get in for close to nothing.
Yeah, give us a call here, 248-539-9797. Want to hear your perspective on things. Any appraisers out there, give us a call. Let us know what we think is happening in the home value and the appraisal market. Haven't had too many appraisal rebuttals, Lisa. A couple, but not as many as we usually have.
No.
Because the property values are going up.
And even the couple appraisals that I've had that have come in a little low, it was not a shock to anybody because people are like, hey, they've listed this house for $115. All of a sudden we get a PA for $130. Yeah. So the appraisal comes in at $125. That's not a shocker to anybody because you overpaid for a house. Maybe like this happened to be in Detroit. And everyone's seller's like, yeah, I knew it, whatever. And they usually have no problem renegotiating at that point.
So people have to really adjust their perspective
Yeah.
right now. It used to be that if you listed a house, say for $200,000, your first offers would come in 180, 185, right? Not now. So everybody out there, if you want the house, and the best way I could put it, but I'm going to let you ladies say it, is what? What do they have to come in? If it's a $200,000 house, what should their first offer be?
Wow. Well, that's going to depend on the condition.
Let's just say it's a good condition, but maybe dated. Like everything is solid, but maybe it looks like from the
So it has the
80s,
orange
do you know what I
carpeting
mean?
and that green carpet that might be coming
So it might
back.
need some upgrades
Really?
because at that price point, that's usually probably what we're going to get.
Really depends on the situation. Like you want to call and evaluate with the agent how many
I love
offers
that
they
you said
have.
that.
You know what I mean? Because that's really the determining factor. If they don't have offers on the table, you can go in probably right at list price or maybe slightly over, if anything.
And sometimes
you know.
having a conversation with the listing agent, you can find out what's really important to the sellers
Yes.
and build that into your deal.
Yeah,
That makes
so-
it big. Sometimes it's occupancy.
Yeah.
Sometimes, there's all kinds of things that go into an offer.
And this is why we work with expert agents like you guys, because so many people will be like, you have to go in exactly at least
Such
200.
a perfect answer because
Yes.
because it's like when somebody calls
you
up and
don't
says,
know.
what are the rates? You don't fire out a rate. You have to ask the question. So what's your credit? What's your income? How long have you been out? So when I go ahead and give you that test question, you guys pass the test because there's no one answer. It all depends. It depends on what's going on in the neighborhood. How many offers has it had? And you ladies are going to do the homework on that. So you're going to go ahead. But the perspective used to be we're going to go under right away and we're going to see what happens. There isn't that one answer anymore because the market has changed. And you guys pass with flying colors. And we appreciate that. And that's why you have to get with somebody and you have to be pre-approved, Lisa. Yeah. You have to go out. And they're not going to take you, Joy, Verona, you're not going to take somebody, put them in your car or meet them at a house and waste your gas if you don't know that they're going to be qualified to buy the house.
Well, in a second, right? I mean, you're not, any person you work with is going to have a contract with you.
Absolutely.
Right?
Wow,
in what
yes.
is in a week? What's today? I don't even know. What is today? What's
we
the
got to
date?
talk about that
if
too.
we're showing houses, we better have a buyer agent.
Right. You have to have a buy. And it's not because realtors are trying to quote unquote trap you. It's because in like a week, the 17th?
The 17th.
The 17th of August, it will become a law. They will not be able to show you a property unless you have a signed contract. Is that not correct? Right?
Well, it's protecting the consumer as well.
It's protecting the seller. It's protecting. It's literally protecting everybody in the transaction.
Yeah.
So, but there's a lot of people who are like, just show me one. All those agents like, I'll show you one for free without approval. I guess you could still have a buyer's agency without a pre-approval, but why would you do that? Because you could still be wasting time.
Yeah, well, we're referencing directly the NRA, National Association of Realtors ruling
NAR.
That's what I say, NAR.
Something else.
Did I say NRA?
Yeah,
Oops. I better leave my
That's a
gun
different
at home.
show.
Leave my gun at home. Yeah, that's a different show. Apologize for that.
Sorry.
The NAR the ruling is that you're going to have to disclose how much commission that you're paying a selling and a buying agent. It's got to be all up front. Now, I'll say this, and I said this on previous shows, Lisa, that you could always go ahead and talk about negotiate commissions,
Nothing's different.
but the procedure's a little different.
Right, but you've always, since the beginning, been able to negotiate
Always.
commission.
Absolutely.
That has never changed. So people all of a sudden are freaking out. And I'm going to say agents who aren't strong in the art of negotiation are freaking out because maybe they don't want to address it. I've had people look at a purchase agreement and I'm going through and I actually read the purchase agreement. And sometimes
Yes, you do.
there's transaction
That's
fees.
good.
And when I provide a client an estimate, I want to make sure that they are 100% prepared. Right. So If a company has a $395 broker transaction fee or compliance transaction fee, I'm putting that on my buyer's cost sheet so they know. And this is what happens. They call me and they're like, well, what is this? It says, we'll say, for example, Keller Williams, blah, blah, blah. I don't understand. I said, well, on the purchase agreement you signed,
Absolutely.
you said that you were going to pay XYZ to them for compliance, and they have no clue. So there's so many people out there that just expect everyone to be upfront, honest, and explaining everything to them. And unfortunately, there's a lot of agents that just don't say anything, get the people to sign this stuff, and then all of a sudden, I'm the one explaining, hey, I have no problem explaining what it is. It's not my fee. You know what I mean? But good agents should take the time to explain every aspect about that
Absolutely.
contract.
That's really good that you brought that out, because when I have a buyer and
Yep.
we're writing an offer, I make them listen to me go through the
Yep.
entire offer, all 6 pages
Well,
of
we
it.
should, right? We
Every
should
time.
explain.
They need to read through it and understand. I'm not a lawyer, but I can say, this is what it says. Please
Yeah.
read this. And,
Well, if
and
it's in
there's
writing-
no surprises.
It's a legal document. We talk about that all the time with purchase agreements. There are loan documents that are legal agreements, but you should be reading
Close
everything.
dates. As a loan officer, how many times people are like, hey, when am I closing?
Yes.
It's on your purchase agreement. It is? Where did I say? How do you not know a close? You literally just signed a contract that you're closing on Friday, like this Friday, and you just told me you're going to be on a boat for 2 weeks. You're not even going to be in town. I don't understand.
You better get that extension and that addendum.
But it's
and
important to review that and work with agents and explain thoroughly and clearly as what is expected of you as a buyer and a seller.
Here we are halfway through. When we come back, join us 248-539-9797, Hardcore Mortgage Real Estate Business Show.
I love it. So.
And we're back on the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm with Lisa Lawson.
Morning, everybody.
I'm with Verona Sibou.
Good morning.
And I'm with Joy Rochlitz. This is not The View. All right. Although we're getting great advice here. And, we're talking about things. It's a beautiful morning in southeastern Michigan. This is the reason why we live here. People say, we live here because of the 4 seasons. I don't know about you, but I'm not down with wintertime when it's 20 below in the middle of
I
February.
like the
but-
winter. I'm a weirdo.
But you love it?
I love the winter. And nothing makes me happier than snow and turning on my fireplace and watching snow fall outside. I actually don't mind being cold. I'd prefer to be cold than hot any day. I know I'm a weirdo.
No, that's
It's all
okay.
right.
That's
You're
great
not-
in
you-
December.
No,
It
there are a
is.
lot
I
of
love it.
Look, we have great skiing. We have great ice fishing, snowmobiling, everything in the winter. But I want to enjoy these last few summer days.
Yeah.
We're coming up on Labor Day here in a couple of weeks, right?
I know. It's
I
coming
know.
too fast.
Yeah, and then we have the change of seasons with all the colors, and people be rushing up north, and it's really beautiful here. We have a great way of life here, and the cost of living here is
Not bad.
when you take a look at other parts of the country, the affordability in southeastern Michigan, the entire state of Michigan is really second to none. That's why it's so desirable to live here, and we always get calls, Lisa, about investment properties, about rentals. And there are people out there that want to know, what does it take to get in to buy a rental property? How much do you have to put down? Credit scores, things of that nature.
Yeah. So if you're buying an investment property, you have to put down 20%. There is no ifs, ands, or buts. You can buy a second home with less money down. But if you intend on renting that out and making money and making an investment property, the minimum down payment requirement is 20%.
So you know what happens? People's wheels are turning. Well, why don't we just call it a second home? Because here's the problem. When we do our investigation, our quality control and everything, even if we miss it and it comes up a month, 2 months, a year from now, we can call that note due.
Yep. 5 days to pay off your mortgage.
Yeah, and you don't want to do that. That's mortgage fraud. That's a whole different show.
Correct.
But, you can get into rental properties, investment properties, and a lot of people do. This area is very desirable for that. And, we have all the programs for that. But reasons to buy, ladies, we talked about at the break, reasons to buy now versus waiting. People say 7% rate, I'm going to wait till rates go down. Problem is, rates go down, prices go up. You have to buy, if you can afford it, buy now, because appreciation is at its all-time high. It's going to continue to go up due to the lack of inventory, which we talked about in the first 2 segments. This is all good news. Equity has reached, Lisa, all-time highs.
And there's ways to purchase a home and create even more equity for yourself. So we were talking about, there's a lot of people who feel like the home that they want might be slightly out of their reach. Maybe they're approved for $250,000, but all the homes they love are at $300,000. Well, the smart thing to do is you actually drop your sales price, right? You're going to say, I want to look at homes maybe around $200,000, and you look into a renovation loan, because renovation loans allow you to build the work in up to your usual pre-approval amount, and you can take a home that maybe was just okay and make it your dream home. You could put in the $30,000, $40,000, $50,000 worth of work. You could redo the kitchen, redo the floors. I mean, do whatever you want to do and turn that, good house into your dream house with the renovation loan. And it also helps because these might be homes that, and otherwise, like I said, they might be a little dated, they maybe stay in the market. Who cares? What does it matter? Because you're going to make it exactly what you want it.
Yeah, news you can use, ladies, when you go out and you talk to your buyers and your sellers, is that the likelihood of a significant amount of inventory coming on the market in the next 12 months, it's unlikely. So what's that going to do? Not enough homes being listed to push prices down. So they're not coming down. Now, we could say, will they stay the same? Not really. There might be a little bit of wintertime lull here.
That's normal.
What's going to happen next spring? What's going to happen next spring, Joy?
I forgot my crystal ball. I'm so sorry.
But in general, the
Joy.
market heats up and people
Joy,
start
I
buying.
need to know.
Probably, yeah. No, as far as property or selling goes, the market goes up a lot.
Yeah.
February, I even see the spring market starting in February, don't you?
People start
Yes.
calling because
Yeah,
they know.
and they're starting to get prepared. But you know what? Let me give you a little inspiration on what Lisa just said too. I love looking at Instagram and Facebook and TikTok reels of women who transform their homes in 30 seconds or less.
Yep.
And even though it might take a little longer than that, You can have exactly what you want. You can walk in a house and see it all updated and it's beautiful, but you can put your own stamp on it. So when Lisa's talking about renovation loans, just think about it as a chance to really make a house your own home. It's what you've always dreamed of.
Yeah. And, everyone always talks about the FHA 203K, which is great, but there are conventional renovation loans as well. And a lot of people don't talk about those. So just because, you're FHA 203K, which is a great program, don't get me wrong, but if you have somebody with strong credit, you could still get a renovation loan with 3-5% down, depending, if you've been a homeowner before or not, through Home Style. So there are renovation loans for everybody. And I don't think that they get enough play. I think people don't talk about them enough. I think, especially in this market, as realtors, you go show somebody a property, they don't love it. They love everything about it, but it needs $15,000 worth of work, or I wanted to do $30,000 worth of updates. Well, then maybe what we should be doing is shifting your price point down so you can find a home that you can do all those renovations and make it exactly what you want.
There's an opportunity there because you won't see the competition on houses that aren't completely renovated.
Correct. So then you could actually have a chance.
I think that's why it's important to work with the right people. I always say your team is your loan officer, and they're just as important as your agent.
Yeah.
If the loan officer is not informing you on these programs, they're not going to know, know. So not everyone's on top of things like that.
Well, that's why we have the Google the office sitting right here in our room. 248-539-9797. Join us. If you've lived through a renovation, let us know. If you're starting one or in the middle of one.
Yeah, I wasn't going to mention that part.
I appreciate that. I had a little water leak the other day.
You have to. So Lisa texts me. She says, when that heat wave was here about, 10 days ago, she says, Harry, we have about 5 air conditioners, meaning big
in the office
units on top of our roof. And one of them, the one that was right above Lisa's office, on the roof, didn't work. So she says, when's this going to be fixed? I said, well, at least, it's hard to get people out there, but we got it fixed. And then she texts me, you're not going to believe this. My roof blew out the other day.
Oh my gosh.
Tuesday.
And so we live this, we go through this, we buy houses and we sell them. We've been fortunate and blessed enough to do a lot of homes in the area and give pretty good advice. But what we're telling you right now is straight up. Straight up, it goes something like this. If you're waiting, if you decide to wait, and that's fine, you're just going to end up paying more.
I can't tell you.
That's reality, right?
How many people waited during COVID?
Yes.
Right.
Thank you.
The market's going to crash. And then 2021, crazier. 2022, even crazier.
Just gonna say
I had people waited 2020 and they ended up buying 2022. And regretting it, like I should have just got it at the time.
I had someone.
It's when you're ready.
Yeah, I said someone I was speaking with in 2019. They did need a little pre-work. So literally around COVID, like I think it was February, I was like, you're almost there, right? Then COVID hit, they wanted to wait. Okay. Because in the very, very beginning, I get it. We didn't really know what was happening with COVID. We're talking like March, April. Well, then they decided to wait. They called me literally like, I don't even know, 3 weeks ago. And they were like, I should have just bought it. And I'm thinking, you've lost out realistically on the, like in that area, $60,000 to $80,000.
Yeah, so
in the equity. Yeah,
in real estate.
How much higher your payment is,
like
or how much lower the rates were.
Lisa, people should just do it. Remember, we say you have to
Especially
do it. In
if it's
real
your
estate,
primary
you can't
residence.
Wait. Yeah.
Well, so they crunched how much money they've been spending in rent for the past 4 years. And they were like, I'm sick. I said, not only all that money that could have been paying down your own debt.
Absolutely.
You've lost out on the probably $60,000 to $80,000 of equity. You know what I mean? And they're literally kicking themselves. And you guys hear this all the time. We're not saying this because we want everybody to get on the bandwagon. And I get it. There are some clients that just never, ever want to own. And that's okay. If you've got your reasons, whatever. But if this has ever been in your thought process that you wanted to become a homeowner, don't wait. You're literally just going to kick yourself.
Equity is a real thing.
It is.
And it builds wealth, and it's done for generations and generations. And all you have to do is take a look back 50, 60, 70 years and see what homes sold for then and what our homes are selling for now. And people that have lived in those homes, they've turned them over, they bought, sold more homes. And that's the generational wealth that you're talking about, mostly through real estate.
And people have this idea, like, because equity is a very abstract thought, right? It's not like it's like a number in your bank account. And everyone's like, well, what does equity do for me? And I'm just going to share this very quick story. I had a client literally close, I believe it was Friday, on a home equity loan. And he worked for a company that always worked overtime. He's been there like 11 years. They cut his overtime, none, zip zilch. And he has all these bills, including one of them where he had to replace his like entire air AC cooling system and all this stuff. And he's like, look, I'm on the brink. Like, I need help. And the only way we could do it and make this work for him is through a home equity loan. And in his case, he was able to pay off every single one of his monthly debts except for his car payment And now he has one much lower payment using that home equity loan, and saved him hundreds and hundreds of dollars a month.
Yeah.
That's what equity can do for you. So now he is able to stay in his house, not having to worry about sell it, not having to worry about how to pay his bills, not having to worry about borrow money from somebody, because he was able to tap into the equity, pay off his own debt, and make a more manageable payment. And that's what equity can do.
Yeah, I believe that. I also believe you shouldn't use your house as a cash register.
No, but in his case, it was.
But the however is that when you're paying off toxic debt,
Yes,
at 18 to 25% in credit cards, you've got other debt, department store, whatever you have, you've got to get rid of that. But the key, ladies, is, and I know you want to hear it before we go to break, I'm going to tell you, you got to go ahead and cut up those credit cards.
Yeah.
But we'll be back. Join us when we come back. Hardcore Mortgage Real Estate Business Show, 248-539-9797. We'll be right back. And we're back with the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. And we're going to go to our first caller, everybody. We're going to go to Mike. Mike, what's happening out there?
Howdy, guys and girls.
Yeah, there you go. You better get to them. You better get to them.
Yeah. All right. I have a new question. My wife and I were looking at condos in the crazy days of 21, 22, kept getting outbid, stopped looking.
Okay.
We're going back in the market this fall. We're going to start looking again. But we've heard that the relationship between buyer's agents and buyers is different now. Could somebody explain what's going on there to me?
Sure. Hi, Mike. How you doing? This is Verona. So
Hello, Verona.
nothing to be alarmed about. It really, not much has changed on our end. Long as your agent is explaining everything thoroughly to you, only thing, people in the past have shown homes without having a, disclosure signed where it's showing that I represent you as my client, we are working together. And this is what commission that I work for. Commissions on our end is just that conversation is happening earlier on versus before. A lot of agents were not even having that conversation with clients. So it was, buyers never knew, they just assumed that, the seller is going to pay for the full commission, and that was it. It was never a real conversation of what that agent works for, and having that full disclosure. Now is just, you're having that document signed ahead of time to show that, they represent you, and that's in your protection and the seller's protection as well, showing you have agency, relationship with that agent. When they're explaining to you what they work for, that all gets negotiated with the sales transaction. So what would happen when you place an offer? The agent is having the conversation with the listing agent. How much are you guys offering on your commission for the buyer's agent? And then all that's negotiable from there. That's a conversation everyone's having. So it's not so much that, you're going to be always fully responsible to pay for your buyer's agent, but that's a conversation that's being had. Like, let's say if, the seller is only offering 1% and your agent is working for 2.5 or 3, then that's a conversation that you guys are having. Okay, well, listing agent is offering this much, and then you would pick up the difference or maybe renegotiate the number, whatever makes sense.
And
Okay.
that's a great answer. If you don't mind, Mike, I'm Joy. I just wanted to add, before 1988, everybody was a seller's agent. So you could go out and look at 30 houses with your agent. They were always working for the seller, not you, which just means that they weren't able to share information with you or protect you as a buyer. So that buyer's agency is so important, and it's really important that you have it signed with your agent, because then their fiduciary responsibility then is to you, not to anybody else.
Not to
and that's
the seller.
what you want. So yeah, that's a conversation. Like Verona said, you really it's so important now, and I think it's going to help us as buyers agents to become better agents, because we're discussing everything the way it should be discussed.
Yeah. So, Mike, I want to add to the conversation. I think you want to know this too, right? What am I paying? Do I have to pay more when I buy the house? So if I buy a house for, say, $300,000, do I have to come up with more money to pay the commissions? Is that part of your question as well?
Yes. That's basically it. It's like, it's fine. I can factor anything in. It's going to get paid one way or the other, whether the price of that I'm buying went up, to cover that or not. I understand that. I just wondered how the process works now.
Yeah.
And they've explained it very well.
Yeah, so it used to be the seller pays, let's say it's 6%, it's a $300,000 house, they're going to pay the $18,000 in commission.
And that gets split between the buying agent and
seller.
the selling agent.
So now people want to know on that $300,000 house, how is the split? Is the buyer paying for it? Is the seller still paying the whole thing? Is the whole thing negotiated? And I think the answer to the question is all of the above, right?
Absolutely.
It's how your contract is written and why it's so important to work with an agent that explains everything clearly, and that you read your purchase agreements and that you understand what you're signing. Because just because the seller is not obligated to pay the 6% doesn't mean that they're not going to. All the contracts I have pretty much already, the verbiage has changed, but the seller is still intending to pay both sides. However, if you sign a contract where it says that the seller's only paying the selling agent and then the buyers, if you're not reading that and understanding that, you could get yourself in some trouble.
Yeah, Mike,
so
I think more,
it's not going to be universal anymore.
Right. I think more comes into play now. I think it's like the old test you used to take, the multiple choice, A, B, C, D, all of the above.
Or sometimes it's
I
A
think
and
it's
C.
now all of the above, right?
Or B and D. And
Right.
sometimes that all of the above tricks you. You just
Yeah.
have to be a little bit more diligent and work with experts that understand, and so they can explain clearly what will be expected to you based on that offer that is written. Because
Mike.
it isn't going to be universal anymore.
Yeah. Anything else,
And
Mike?
this is good, though, because we looked at a few when we were looking for sale by owners, and they didn't want to work with an agent at all. And there was no way I was going into that transaction without an agent. So this would actually maybe be an advantage
Correct.
in situations like that.
That's a great way to look at it, Mike.
Yeah, absolutely.
All right. Well, thank you.
Well, we appreciate your call. Thank you for that call. It's just a more sophisticated way of looking at it. You have to look now. There are so many layers. It's peeling back the layers of the onion. It's just not on top anymore. You've got to get down into it, and you really have to know your stuff. And that's why working with experienced agents, Joy, Verona, a lot of our real estate partners out there, they really have it down. And when you make a phone call like Mike just did, which was a great call talking about this, you really have to get deep into it because it's just not that same old way anymore.
Yeah.
Yeah. I mean, we always say everything's negotiable, and even more so now than ever, right?
Yeah,
when this drops. So you just need to be, do your due diligence, work with agents that are honest up front and, have no problem explaining the contract and what that's going to mean to you and your bottom line. And your loan officer should be doing the same.
And Lisa, like you mentioned earlier, I think it's just gonna, like me and Joy have talked about at the office, it's just gonna weed out a lot of the agents that weren't actually in it and communicating well. And you have to be good at sales. This is our job. You have to be a good communicator. You can't just expect everything to be done for you. Our whole job, A to Z, is negotiating.
Yes.
So
this shouldn't be such a big deal. And that's why
It really
everyone's like, well, how
shouldn't.
this? And I was like, don't you negotiate for a living? I mean, really, that's real estate.
People don't like having those uncomfortable conversations
I love
about
it.
money, about what fees are. And in our side of the transaction, we have to disclose up front every single time, bar none, and put it in writing what our fees are going to be. Even if they're not our fees, appraisal fees, title fees, closing costs.
Realtor fees.
Everything.
Literally
Taxes.
everything. And everyone thinks it's
Taxes.
us. And I'm like, just this little tiny portion is the lender.
Yeah.
All these are third party.
So we have to
They don't
disclose
realize
that
that.
up front every single time, and that's what we do. But nobody likes talking about it if it's not if you didn't do it for 21 years and all of a sudden you have to do it, it can be uncomfortable. But you really should educate yourself on doing it. And you're absolutely right. The ones that don't want to do it are going to be out because it's going to be too uncomfortable for them.
And I think, too, it's important to understand that even though, there are a lot of numbers involved in this whole process, a good loan officer, a good agent is actually going to care about your best interests. And the ones that really, truly do care will do right by you.
Yeah,
and
absolutely.
the best that they can. We'll always try to work it out for your best interest.
Yeah, we're here with Joy Rochlitz, Verona, Sibou, Realty Executives, Hayes Road, Shelby Township. You got to give them a call. You want to talk to us at Capital Mortgage Funding, it's 1-800-LOW-RATE. We've been there for a very, very long time, and we will pick up the phone, answer your questions. It doesn't cost you anything. There's no obligation. We'll put you on the path to home ownership, and the ladies will put you on the path to home ownership as well. But remember, you have to get pre-approved. And we talked about that in the first 5 minutes of the show today. Nobody wants to talk to you without being approved, and it's an easy process, doesn't cost anything, and there's really no obligation to it. So you got to go out there. You got to really arm yourself with all the information out there, and you've got to work with people. There's an old saying, it's not what you know, it's who you know.
Yeah.
Both doesn't hurt.
I know it's
both doesn't hurt.
No, but I know it's somewhat popular to, everyone wants to do text. Everyone wants to send me the link to your app. I'll fill it out online. But there's things that get lost in nuance, and I know it gets frustrating, and I know people are busy, but I can't understand how you can go to a closing and have had barely any conversations with your loan officer.
That's scary.
It's super scary. And I understand that some people just don't want to have all those conversations, but please have at least one good in-depth conversation with your loan officer, because they should be able to tell you, these are all the programs. If you find a house that needs work, this is what can happen. If you find a house that needs it, you don't know what you don't know. And just filling out something online saying, I want a conventional loan, I got 5%, and I have, I'm a first-time home buyer, you're going to get cookie plate, here's your pre-approval. Well, there could be other options for you that may have been a better fit. And it could be that you think you're not getting the great rate. Well, maybe your credit score is 710, but we could do one little tiny thing and you could be a 740. That makes a huge difference in your rate. You don't know. You have to pick up the phone and have at least one conversation. Yeah. Even if you fill out the online application, even if you fill the link and download the app, which I love it. And I love how simple it makes things. Certain parts of this business need face-to-face and need conversation. So you have the best understanding. I don't always meet clients until closing day, right? Because I'm not the agent running around showing them homes. Right. And at closing day, usually I walk in and they know what I look like, but I don't always know what they look like because driver's license pictures are super misleading when they get photocopied. And half the time, I'm like, this is the first time I'm meeting them, but they're always excited. And I'm always excited to meet them.
Well, nothing takes place of that
but it's
personal
that
interaction, that relationship that you have. And that's why, And that's why there are some people that are more successful than others because they take their time. And public service announcement number one today is establish that relationship. And if you're a realtor and a loan officer, you should show up to that closing.
100%, especially
Show
first
up
time
to the
home
closing.
buyers. Yeah.
Exactly. And it's 9:55 here on a Saturday morning. Can you
over.
believe it? I can't believe it's the fastest hour in radio. Ladies, Joy, Verona, Realty Executives, Shelby
Hometown,
Road,
yep.
Shelby Township, Hayes Road, Lisa Lawson, the Google at Capital Mortgage Fund. We appreciate you. Everybody out there, we appreciate you listening every Saturday morning from 9 to 10. Harvey, Becky, myself, John Kolb, Lisa will be back next week. Talk to everybody then. And
Thank you
have
for
a
having
great
Thanks,
night out
everybody.
there.
Go
Thanks so much for
Lions.
coming.
You guys are great, and it's a lot of great information, and we'll see you next week.